This is the Ask Faleskini podcast, where the modern economy is discussed from a skeptic's perspective. Mr. Faleskini helps you distinguish what is sustainable in our economy and what isn't. Not everything that glitters is gold, and not all mud is dirty. The podcaster Mr. Faleskini provides no-nonsense advice. He had it all, lost it all, went bankrupt multiple times, and is now attempting to come back from zero with sustainable growth. There are numerous coaches and preachers on the internet that preach about positive thinking and how life is all roses if you just care to see it that way. Well, Mr. Faleskini is definitely not one of them. We recommend you ask Faleskini to keep it real. He discusses the darker side of the current economic reality, the side that's more important for your personal and business finance. His first intention is to help you keep what you already have. Not to be a complete party pooper, Mr. Faleskini will also hint at the earning opportunities in the economy today. In order to please the almighty algorithm, please like, share, and subscribe. And now it's time to start taking notes. The mic goes to the podcaster, the one and only Mr. Faleskini.
Welcome to the Ask Faleskini podcast with a guest. I'm proud to present James Forrester from Birmingham, United Kingdom. Business entrepreneur, property guru, and controversialist. James has a proven track record in property development, sales, and investment across the UK and Europe. He's often featured commenting in the national press on property-related news. He has worked in property for 20 years and ran a number of property businesses across the UK. James, please tell us about yourself and how you started your business. What is your story?
Yeah, so great to be obviously on the podcast. So my name is James Forrester. I am what people do say is a bit of a property entrepreneur in different ways. I have a estate agency, letting agent business across the West Midlands in the United Kingdom, covering obviously a lot of the various towns and the cities around the city centre or outside the city centre. I also have a property development business where we build purpose-built student accommodation and residential property in the West Midlands and the northeast of England as well. So my story is very, very simple. I went to Spain when I was just over 18 years old. Like most people at 18, especially young boys, you're not really sure what you want to do in your life. And I went to a timeshare presentation originally, and that's what paid for me to fly out to Spain. I did that for 3 months and absolutely hated it. Didn't like the way it was being sold. Didn't like the concept of by weeks, by points, etc. At all. So I left that very quickly, but I wanted to stay in Spain, which was the Costa del Sol. The warm weather is a lot better than what we get here in the UK, especially, 365 days, very good weather against probably 2 days of good weather. But what happened, I left, I actually went to another timeshare company, but to learn all about the property management side of how you actually run developments with, service fees, for example, what it pays for, how you keep the grounds nice, the property nice, the repairs, the maintenance. So I did that for a number of years. And then I actually moved into a sales environment to sell off-plan properties. And I started selling properties in 36 regions in 18 countries around the world. So it was very busy. You had to put a lot of hard work into it. Unfortunately, in 2008, we obviously suffered a financial crash, and it was probably felt more in the overseas market a couple of years in 2009 into 2010, because you only bought overseas property if it was a luxury. And of course, if people couldn't afford to buy, they literally were not buying. So I moved back to the United Kingdom with the wife and the children, and went straight back into property again, but more on the traditional estate agency side that would be helped. And of course, we've built up from there, from building a great team around me, using my knowledge from off-plan properties to work with property developers, mainly in the West Midlands, Manchester and the Northeast, to get their products built, have them sold, make sure it's all done correct with the pricing. And that's what's led me into property development myself. So that's pretty much my story. It's very simple. It's all been a good opportunity, and it was about taking risks at the time. Moving to Spain at such a young age, there was no support, to go there. It was very much of packing the bags, going, thinking it was going to be exciting, and came back with a wife and 2 children. So, something went right or something went wrong. It depends on how you look at that.
A lot of different experiences and from different regions, and then you move back home. So basically, you have a global overview of the property market. However, you're utilizing this global knowledge into your local market. Am I correct?
Yeah, correct. I think, especially the big difference between the UK and the overseas market is I would say the overseas property marketing side of it is a lot better. And using the strategies of how you have to promote developments, how you get early sales, what the benefits of getting in early to developments and these opportunities we've been able to bring to the UK and make sure that developers and clients who are purchasing are getting the right value for their money, and making sure they're getting the right advice and information as well.
When you're talking about development and your development business, is that more like a project management company, or you also own a construction company?
It's a bit of both. So obviously we have the projects that we construct and then we build ourselves. We obviously hand out contracts for these. And then on the side of that, we have a property management business, especially more on the student accommodation as well, because most of our residential properties are sold to end users. But on the student accommodation, we will then put the contract out for tender for the property management. And if one of our other companies and the people who are running that obviously can give a better presentation and what we're going to get, they will win the contract, but they will also go and win other contracts with other developers to make sure that their properties are being managed correctly and are being rented to the right type of students.
In construction business all over Europe, there's a huge shortage of workers. How do you handle that? Do you have this problem, or do you have your own team? How do you handle?
No, we have the same issue here. A lot of the workers that we need are taken up by various companies. So we are battling the same as Europe. In the UK, we're battling the same to make sure you can get the right workers. I think what's more important is not the workers, because they come in different stages throughout the build. So you've just got to have a good build program. So, when you need your infrastructure, to when you need your workers, to what you need your electricians at the back end for are completely different timings. What's probably the hardest thing in construction at the moment is securing costs for the materials, securing the materials at the right costs. That's probably the most difficult at the moment, because costs have just been driven up on the materials, so everything is increased in value. So that's one of the key elements in the construction world at the moment, securing the materials at the right costs.
Okay. Do you have any special trick how you do that? Let's say advance payment to the suppliers, or how did it? I imagine the cement prices went a bit up. The construction wood prices is also, the materials are also
wood, bricks
on the rise. Is there any trick that how you can hedge against that?
Yeah, well, timber, concrete, bricks, you name it, everything's gone up. There's nothing gone down. It would be nice if we had something that went down. Is there any tricks? Well, I can't give everything away, obviously, but there's not really any real special tricks on it. There is things where if you've got in your build, you need your cement by a certain time, then of course, yes, if you're able to offer an advance payment to make sure that you're securing that date and you're fixing the cost, that's usually one of the number one to be able to do, because you want to make sure that one, it's in your build program, you're not going to feature any delays. You have to remember, if you have a delay, and say there's a 5-week delay, well, that may cost you a lot of money. It could cost you £50,000, for example. So you want to try and cut your delays down as much as possible. But you are sort of in the hands of the supplier. So even if you do pay in advance, or you're paying deposits, but I'm aware of people who are paid full in advance, have been promised dates, and it still hasn't arrived on time. So purely because of the demand that's been happening, and also then the costs are changing. People will then say, look, we can't afford to give you that cost anymore, we'd rather refund you your money, and you're going to have to buy at the new value as well. So it is a tricky time for the construction world. But again, you adapt, you adapt and you change. That's the key thing. You can't, what my advice would be, if you're asking if there's any tricks, is not to lose faith. It is stressful. You've got your team that are doing all the purchasing for you, and they have to stay motivated, and the key thing is motivating your staff to not lose faith, to make sure that they stay within their budgets, and they can secure the right deals. And, that's one of the key things, is securing the right deal and getting the right timing.
Are you caught in a let's say, between the rock and the hard place, because the end clients are not eager to pay more because the interest rates are rising. Is that also an issue with you when you sell off plan?
Well, when you're selling off plan, it's a bit more difficult. It depends when the client's purchasing. If they're buying say a 3-bedroom, 2-bathroom house, 2-story to move in for as a first-time buyer, or obviously as a family home, for example, then normally they will buy anywhere between when practical completion is about 6 months beforehand. Because when they're securing a mortgage in the UK, they have to act within 6 months to take out the mortgage from the decision in principle. So it's more about the timing of when they are reserving the property rather than when the completion's happening. So, for example, today, fresh off the press, we've had a new increase in the Bank of England rates. That will obviously affect mortgages. It will push them up slightly as well. But it's compared to what? That's my big answer at the moment. What are we comparing it to? Since the financial crash, the rates went down, and the Bank of England have effectively kept the rates very low. So people have got used to, 1%, 2% mortgages, for example. In my opinion, the Bank of England have been caught sleeping behind their desks. They should have increased the rates a lot, many years ago when things were doing very well. There wasn't a pandemic, the economies weren't being closed down. We should have seen increases then. So it's all about reserving at the right time. The average interest rate in the UK in history is between 3 and 5%. So if you're comparing it to what the average is, well, to be honest, it's where we are now, on this. But if you're trying to compare it, to 2 years ago, 5 years ago, for example, then of course it's a bit more expensive. But there's a housing shortage in the UK. There's still a huge demand. Even today, we have a lot of buyers coming through, a lot of people, very serious buyers who want to get on the market. They're moving for relocation purposes, for jobs. They need to be for schooling, in the UK. Typically, if they wanted to get into the right school, they've got to live within 1 mile radius, as the bird flies, directly into that school. So, I think if the numbers over a year dipped under 700,000, then I would be concerned. But they're not. They're still around 900 to 1 million people are still moving on an annual basis. When there was a world crash, they were doing around 700,000. So I've already now judged my figures on this to look, as the world crashes and it's about 700,000 people were still moving on a yearly basis, then at the moment,
so you have your own statistic. How you see
I don't have the crystal ball. If I did, I would pick out the lottery numbers. I'd be retired living somewhere. So but you have to knowledge is power. You have to do your homework. And when we're building off plan, everything's for the future. So we don't have the crystal ball, but you are able to study trends. You're able to see where markets should move. So as we're sat in the UK now, it's great for overseas investors buying because the pound's relatively weak. So this is the time you want to be getting your money in. The pound, it will get stronger. The government's very keen on getting the pound to be strong. There's 2 reasons for that. One, it's good for people like me going on holiday. To get more money for my currency. Obviously, if you're buying overseas as well, you're getting more for your money on that point. But as I said, that's more of a luxury. The other one is if the pound's strong, then obviously you're buying in your oil a lot cheaper. And obviously that's what makes a lot of the world go around at the moment, and that has a big impact on inflation. So at the moment, the pound's obviously creeping up not dramatically, but it's creeping up a lot higher than what it was from about 4 or 5 months ago. So again, that's having a big impact. But as I say, for me, the market's still very strong. I know in the media, you will see, talk of 30%, 35% crashes, in the prices. We're not going to see that. I'm pretty confident we will not see anything near that. While we had a financial crash, the market dropped 19%. That was the world crashing, and reset. This is not that at all. There's too many regulations in place. People have to use bigger deposits now to purchase on that. So I'm very confident that what we will see is a market sort of hold strong. And then by Q4 of this year in 2023, I actually think we'll see prices slightly increase. Not a lot, but only maybe by 0.51%. But I think the market will stay strong. There'll be less. It's a buyer's market. So it's all about people coming to the market at the right time, and having the right prices. But I'm not worried about the market at all.
Okay, I'm glad to hear that you're optimistic about it. My prediction for UK is also positive. And I believe Brexit will be really good for UK in the long term. And I think you're already reaping the benefits.
Yeah, I think so. I think. Look, I'm quite happy to admit I voted Brexit. Obviously we've just celebrated the 3rd-year anniversary. I don't think the UK government have taken advantage of it. I have my own reasons for why I did it. One, I've lived in an overseas country in Europe before, so I've seen both sides of how things can work. I think there's a lot more benefits on it. I think we can trade, with the EU without having all the regulations attached to us. I don't think we're feeling it. We haven't seen it yet. I think politicians have been lazy to get this done. I think on the flip side, the European Union doesn't want the UK to be a success, because obviously for the first divorcee, if you want to call that, as it's gone through, then you can't allow the country to be successful, because everyone will think, well, why don't we just do that then? So I think there's going to be a bit harder for the first few years as we're coming out of it. But I think now's the time. I think now we're going to start to see the benefits really start to come through. Fingers crossed, obviously. But I think I'm
really optimistic about it, especially with a new deal with India and new deal with China. That could be a breakthrough for you, because then it would be hub for all the EU to India and to China.
Yeah, look, absolutely. If I take, as I build purpose-built student accommodation. We rent a lot of student property, through our management company. But to give you an idea, at the moment, you would say that the Asian market for the Chinese is very huge, at it, but it's changing. Things are changing. China's obviously put a few restrictions in place. Not many people are having as many babies anymore over in China, from this. But for the universities to come, India and Sri Lanka and the African markets will catch up. By 2050, we will see virtually the same amount of, say, Chinese students in the UK than we will see as sort of the Indian and African nations come through as well. So it's very exciting going forward. Again, because I'm building off-plan properties a lot, I'm years ahead of the way that I've got to think. And it's about having that optimism. If you think too short term, you won't be able to gain. You will get negative. You'll have negative thoughts about the market. You've always got to look forward about where it can be, and you have to take risks. So, you've got to take calculated risks or gut feeling risks. It depends on how you operate as a person.
Okay. As an experienced real estate developer and also entrepreneur, what do you think would be the best business to get in as a first-time buyer? For example, with people that are just, for our listeners that are about 40 years old, they have repaid student debt in the US. They have now a bit of a spare money. They need to diversify. They cannot invest everything in their own country. If they would come to UK, what would be the best property, or which part of the market they should consider? Is that an off-plan? Is that buy-to-let residential? Is that buy-to-let commercial? Are these hotel rooms? Are these student accommodation? You mentioned student accommodation. What would you recommend for someone that would like to have positive cash flow from day one, and also rise in prices, for example, in the next 10 years?
Okay, so I think there's two things to that. I personally think they should be buying into purpose-built student accommodation from this, because it will give a cash flow on this. It's about buying the right type of accommodation as well. It's not just about buying cheap. You need to buy into cities where the universities are very powerful. They've got a large number of students coming through. The universities have got great plans, within the city itself and their expansion, because you've got to have that flow of students coming in constantly, and it will give you a very good cash flow. Most good purpose-built student accommodation will normally yield around 7% net, from your investment, which is a very healthy return. It's not about being greedy, it's about being sensible. And why I'm very much, yes, I have to declare I build purpose-built student accommodation, but there's a big difference on it. It's about building what students want. It's not about what I want or you want. Where unfortunately we're both too old now for for the university, and the accommodation. So it's working what the young people are after. What they want is an experience, and like a lot of them are saying, there's a lot of a lot of research goes into this. There's a lot of surveys that are sent out, and what we've seen is a shift, lately. But what a lot of students are asking for is they want to feel safe. They want to have a lot of students around them. Their rooms themselves don't have to be as big as they used to be, but they want great communal facilities, from that, so they can have that full experience. And the good thing is, if you've got a happy student in your accommodation and in university, they're there to stay for a long time. Normally where we build, we will be looking at universities that really concentrate on people who are studying on a 3, 5, 7-year term. So they're there in the city for a long time, but it's going to give you a great cash flow. And it's a bit like now, let's rewind this back. If you went back to 2008, 2009, when there was a world crash, students still kept going to universities. Students still stayed in student accommodation. During COVID, or from the horrible word that not many of us like to speak about, students still had to pay for their accommodation. They were still in their accommodation. So it was one of the best or most resilient alternative property investments that you can have in your portfolio, compared to, say, a buy-to-let, for example, within this. And that's cash flow. Student accommodation doesn't increase a lot in value because you're very much looking at the yield more than anything else. If you're looking for something that's going to go up in value, then it's a different type of investment. You've got to add what's the value you're adding to justify to get the extra value out of the property. Now, that could be buying a property that needs renovation and flipping it, for example, which I know is popular in the US and UK. It's very popular as well, on that. But like we know on that, it doesn't always mean you'll get the correct returns. As you're, renovating a property, to buy your materials may increase throughout the build. You may go over time. You might be charged more money for it. Then you've got a lot of taxes on top for your capital gains for when you go to sell. So you might not always come out with the return or the high return that you're expecting. Got to remember, property prices can go up and they can also go down.
So let's return to student accommodation. What would be the minimum investment that you would recommend for student accommodation?
A decent student accommodation should not be less than £100,000.
So 100,000. Is that for a room or?
That could be a room, a studio, apartment, depending on the location. Of course, location will dictate it, but anything that's really cheap out there. So you will see things that are 40, 50, 60,000 pounds. We don't know how they build them for that price. It costs more than that to build the actual units themselves. And you've got to think long term. It's not about the first figure that's put out there. You've got to look at the whole concept behind it. What am I getting for the money?
The total cost of ownership, so that you're not
exactly. It's the cost of ownership. How is it going to be run? Why is it attractive to students? Why would they stay in your development more than anything? What's the demand in that city from students as well? How many beds do they need extra every year that's not being catered for? What universities are there? What are the plans from the universities? Why would people be going to these universities? There's certain cities in the UK that are not doing as well, on student accommodation, because their universities haven't got that draw to come in. They haven't got that expansion. They haven't, they're not being as proactive enough to get out into the market and really bring that in. And that's very, very key to do that. And that's what we're starting to see. And that's why I said, £100,000 would be the bare minimum to be that. I think the most successful ones that we do and our competitors do, you would be paying £120,000, which, as I say, to your listenership in the US, that would be quite cheap, for what it would probably cost to some of most states. Within that, the rooms will be a lot smaller, but it's a different type of market. The UK students want the community facilities. That's what they're after now. They want to feel safe. They want to feel included. They want their group study areas, individual study areas. They want that nice vibe. It's got to be Instagrammable, TikTokable, if that's a name, on that. But they've got to have where it's cool. It's cool to stay there. From that, where's all the facilities? Where's the amenities? How far is it to walk to restaurants, pubs? Students are changing. I didn't go to university, but a lot of my friends my age did, and they were going out drinking all the time and partying. Students are all about, a lot of them, they still do that, of course, but a lot are now into wellness and health and their mental well-being, and that's very important. And a lot of things we do is really focused on this now.
Okay, so that brings us to another question, which is really similar. So, what would you do if you would be a first-time investor with all your expertise, of course, and you would have 10,000, 100,000, and 1 million to invest? How would you invest that money in property market in UK?
Okay, so £10,000 is not going to get you a lot, being honest. You could try and work with some property companies, and maybe you can get what's called crowdfunding, for example, where you can put your money in. You might get a return, on that. You've got to look at what you're probably going to get for £10,000. Is not going to be. It wouldn't be attractive enough, really, especially if you're coming in from overseas. Your bank charges will probably eat most of that up, as you get an incoming and outgoing transfer. So you would need to increase it, a little bit. I think the bare minimum, if you were going to do sort of any crowdfunding, or even working with a developer, where they can do, they will take your money to help build the project themselves, and they will do a contract to say that they will give you a certain return over a certain period, a time frame, on that, and that might work better for you. If you're at £100,000, then I would start to look at cash. You could do the same as that. Absolutely. You can put it into that. But usually when you're at around the 100,000, you've got to look at your strategy different. You're either going to go, I want to own assets that, that are normally high yielding assets, or you're prepared to put it in with a developer to get a return. You don't want any hassle of ownership. You don't want to have anything registered, for example, and you just want to go, I want to give you that money. What are you going to give me back? So am I going to get, if I give you £100,000, are you going to give me a 10% return over 12 months, for example? That could be quite attractive. And if it's coming from overseas, it's now the time to do this, because while the pound, it has increased slightly. So, you want to get in now, because once the pound's high, that's when you want to be taking your money out and putting it back.
Yeah, because you get then double return. One on the
you'll get the benefit of the exchange rate. Yeah, of course. And if it was £1 million, then I would be speaking with developers. We work with investors like this, and they will say, look, we've got the funds available. We like what you do as a company. We want to work with you. This is what's here. What can we do? Are you looking at sites at the moment? How do you think you could utilize that money? What sort of return you would get? And we have open and very frank conversations. It's not the case you just give me £1 million and, we do what we want. It's all dealt with, proper legal contracts, solicitors example, where we lock it down to go, right, this is what we're going to do. And everyone's very clear and transparent on how it works. That's what I would be doing with £1 million. I think you'll get a much better return. There's risk involved, on that. So you could separate your £1 million. You might do, I'll buy 3 or 4 units, for example, at £100,000 a unit. And then I will do the same, might buy 5 and then do £500,000 to invest. So there's very different ways that you can spread it. It all depends on what your appetite of risk is, and normally the higher risk, the bigger returns. I think you've got to look at more of the medium-sized risk, where you can see exactly what the money's going towards, exactly what a developer's building, for example, if we're looking at this route, and then normally you would get a higher return, for your money on that, rather than being, a huge risk. But you've got to decide what you need. If you've got that money and you're thinking, be very clear, write down what you're looking for, and then have various conversations with people and say, look, this is the money that's available. I need to know how you could use it, what the return would be. Am I going to be comfortable with it? Why would I use your company, for example?
So basically, if I understand correctly, student accommodation would yield about 7%.
You can get, in certain areas, you may get higher, but on a net yield, not a gross. On a gross, you might see 8.5%, 9%. Obviously, of course, you've got service charges, to run the building correctly, 7%. But look, even if you were getting 6%, if you were getting 6% every year with no void periods every single year, for 10 years, for example, then you're doing very well on your property investment. You would then be looking at it going, if I took my money out, what would I be able to get for that money to get that return? And the answer is probably very little.
Okay. I'm a skeptic about this, because the inflation in UK is higher than 7% right now. So,
but it is. But you're buying with cash. You're not borrowing the money. So obviously,
but the inflation is real. So I will get less than what I invested in if I go out next year. That is a problem.
You can look at that. Look, I'm not a financial expert, but if you looked at any property at the moment, you wouldn't be getting more than inflation. So it's irrelevant. It's inflation short term. Inflation can go up. You have to deal with it for a few months, and then it can drop. Happens in any marketplace. When you buy,
I agree with that. That is why I'm always looking for or recommending, because I also do work as a treasurer. I recommend to my clients that they look in two ways. So the increase in price needs to offset the inflation, and there needs to be some yield to be higher than the interest rate.
Okay, it's an interesting concept that. I'm all for property because property prices can go up and go down, and I think everyone's got to be very realistic on that. On that point, you can always have a blip in the market that can change it. Yielding properties are very different. Inflation's already started to come down in the UK.
I see positive trend. I believe that UK will start right now.
I'll just be very blunt. I think it's a very dangerous game when people look to try and get much higher returns, on a property market. That's not sustainable long term. What you have to do is look long term with solid income, and then they're usually the winners in the property market.
Yeah, I agree. A 10-year period for sure. I'm 100% on you on your side with that. And now let's get to our next topic. What did you have to do to be featured commenting in the national press on property-related news? How did you become the expert that media is looking for advice?
Usually, I say different to everybody else. I'm a bit controversial on some of my comments. From that, but it's knowing, it's having the knowledge. And as I say, like earlier, it's studying the trends and know exactly what you're talking about. I think that's the key thing. If you're going to go and do, being on the media and you're being asked, for example, you've got to be honest. You've got to be transparent, and know exactly what's going on in the marketplace. But you've got your own opinions, but you have to stand by them. You've got to be prepared to change them because no one knows what might happen in the marketplace. From that, but I've not been wrong since Brexit yet. My property, everyone before Brexit was property prices will crash. They're going to fall off a cliff. Well, they haven't. They've increased. Pandemic, everything's going to crash. Everything's going to go wrong. Well, it hasn't. It's done the exact opposite. Last year, I started saying, look, 2023, we're going to see a huge change in the market. Things will flatline for a bit. We'll just see a plateau in the market. And then we might see a little bounce towards the back end. And that's exactly what we're seeing now. Now, I'm not perfect. I don't have that crystal ball, but I study trends. Stats don't lie. That's a key thing. If you study the trends and study all the statistics, then you will normally get a good picture from that. And also, you've got to have a positive outlook in life. Things can go down. Things can go wrong. But if you get sucked into believing all the negative headlines, which sell, positive headlines don't sell in the media, negative headlines sell. But you've got to stick with your instincts, but you've got to be able to justify what they are. I can't just go on a radio station, TV, be featured in the national press as I am, and just go, your headline's completely correct. For example, I think it's totally right. It's boring. No one wants to hear that. What they want to hear is industry experts, on what they're exactly thinking at the time. And what I will do is if it's wrong, that headline, I will fight back on it. And I will say, well, actually, that's not the case. This is what's happening at the moment. And I have journalists who have contacted me on this who have then gone, we can't feature you because we don't agree with what you're saying. And I went, no, you don't agree with the story you're trying to write. There's a big difference. You're after a scare story. Well, unfortunately, my stats and my statistics and everything else that I've got, what I'm seeing in the day-to-day world, because the media is here and now. It's not what's going to happen in 10 years or 3 years. It's about it here and now. I went, we're not seeing it. We haven't seen what you're trying to report. So how can I honestly say, well, yes, I think it's going to drop. I don't want more. I don't need followers on my social media. That's not my agenda or anything like that. It's about having a true reflection. It's about having a healthy debate, comment on it and say, well, actually, you're saying this. Well, what about this? That could change it all. We have very low unemployment in the UK, at the moment. It will probably increase. I think unemployment will increase, with what's going on at the moment. but not to the levels that we have seen when things have gone wrong. There's a lot of wealth creators in the UK, a lot of startups, a lot of entrepreneurs starting companies, who are on big recruitment drives as well. So like I said earlier, you have to adapt and change. And that's why I do a lot of commentary now in the media. It's why I've been chosen to speak a lot in the media, is to offer the balanced view of actually look at the market very differently. Don't read the headlines, study the market, speak to people who study the market, for example. There's various people like me who will do this and offer a balanced view. Like I said, property prices may come down. They may go up, they may go down. That is fact. Rental income may go up, may go down. But we study the trends to go, look, it's going to plateau at the moment. It's going to be difficult. There's a cost of living crisis, especially in the UK, probably more than most places, because we obviously import a lot more than obviously what we have homegrown. So we have to change policies in government to make the UK a more to be less self-reliant, to be more self-reliant and not reliant on other countries. But that has impacts.
So to sum up, in order to be featured in the media, you need to use honesty as your best policy, study trends, and have positive attitude.
And don't be afraid to fight back to the journalist or the media commentator if they're asking you. Don't be afraid. If your views are different, then that's exactly what they are. You have to say, look, my views are X. Don't be afraid and just go, I totally agree. It's got to, at the end of the day, on the media, it's got to be a good show as well. From that, otherwise it's boring.
Yeah, and that brings us to the next question. When did you become aware that you're an influencer? You said it's not important to you, your views, your likes and all this stuff, but you are an influencer. When did you become aware of that?
See, I wouldn't say I'm an influencer, to be honest. I'm just a property person. That's what I am. On that point, I think for how people will look at it is the knowledge, knowing the market, as I said, and just being transparent with clients, to turn around and just say, look, if someone's looking to move at the moment, for example, their home, everyone will be like, yeah, you should move. If you're getting it, I own an estate agency and letting agents, so, obviously I have my stuff. Their question will not be, I need you to sign a contract to sell your property because we get paid commission. Their question is the same as what I would be asking, is why do you need to move? And that gives you a different answer. It's not because I want to or I want a bigger home. It's like, well, why? Do you actually need to move home at the moment? Which sounds horrible because you think, God, you're turning business away. But if it's not right for that person to move at the moment, then a good property person would be advising the client not to move. It's not about it's not about us earning money. And everyone thinks that property people are greedy and we earn fortunes. We don't. We're not greedy. We go through a lot of tear and heartbreaks and risk a lot for what we do, especially more in the development world, I would say. But yeah, I'm an influencer. I wouldn't say I'm an influencer on it. I would just say, I've been in this market now 22 years. I've learned, I've got a lot of knowledge and a lot of experience. I've seen a lot of bad, and I've also seen a lot of good, on that. And I think now it's the journey of starting to share it more so people can learn about the property market as well. I don't sell courses, for example. I'm not here to go, you pay me X amount of money and I will educate you how to do it. That's not my style, at all. I don't believe in them sort of things, to be honest. I think you should be able to sit down with people and have good, honest conversations. And look, and if you like what they're going to do, you should be using their services. I think where people can go wrong is then they'll go, thank you for all your information. I'll go off and do it myself. And then it goes wrong and then they come back and blame you. So I think it's just be transparent. Be yourself at the end of the day. Be yourself.
Okay. So with all your businesses that you have going on, so with agency, with development, and all the other stuff that you do, how do you balance your private and work life? Is there a balance?
So this is where I'm very controversial. Work comes first to me. So work actually comes before my family. It sounds horrible. It always has. From a very young age, I've always put work first. It's drilled into my head. I'm trying to change a bit more now. I am trying to spend more time as a family person. I can't put my phone down. I'm constantly checking emails. I am constantly working, from that. Is it good for your health? No. Is it good for your family life? No, on that. But I think when you are, is it trained? And trained's probably the wrong word, but when you are so focused on building things, which is creating jobs, I get a lot of happiness by being able to employ people and see them develop, throughout the years. I think that's a great satisfaction to see people do this and then move on. They will move on. They'll move on to other companies and they'll start, taking their career to the next level. I think that's the best satisfaction you can ever have from running a company, is seeing people obviously do this, on this, or come along the journey with you, and they go from, I started making the tea for the boss, and then became a director of the company, at the time, and I've gone through the whole stage there. But yeah, I put work first. I do a lot of traveling. I've been able now to have a bit more time away, so I like to travel around Europe and see many places. And it's all about architecture when I'm away. I always look at estate agents' windows. I want to see what the property prices are. I like to walk in and have a chat with them. So I am a bit of a property nerd, if you want to call it this. It is very much my life. But without it, and it will sound strange, without it, I probably wouldn't have the family that I have today. Or the things that, we've been fortunate, we've bought the house that we wanted, and things like this. And these things mean more, but without my drive, will the company, have, when things go wrong, people look up to the person at the top and they want that enthusiasm, that passion, that drive to pull them through the tough times. Anyone can sell property in good times, things like it's not hard in the good times to sell property. Good estate agents, developers who are selling property, it's in the bad times. That's when you're good at what you're doing, because you've got the trust, you're being transparent, you're showing the benefits, of why it's the right time to be able to purchase, or it's the wrong time and you shouldn't be doing it. But people then might go, you know what, that's right, I don't need to move, but I have 5 properties that are let that I would now like you to manage for me. And it's having that overall. Don't just be so focused on one thing. It's about being there. So yeah, to answer your question, I put work first, okay. And then family second, unfortunately.
We touched one topic before we started the interview. You were running for charity.
Yes.
Is that
never again?
No, not again. Too difficult. Do you have any sports that you do, or?
I like playing darts in the bar, if you can call that a sport.
Okay.
10-pin bowling, because I can have a beer at the same time, if that's a sport. Look, if we came back to the charity, it's a charity I support in the Northeast. They have disadvantaged young children and adults. From that, they have various, it's disabilities, for example. I've always, from a very young age, had an admiration for. I think some of these young people are an asset, to the world, and they just don't get the right type of opportunities, unfortunately. It's just the world that we live in, and people look at it very different. And this is a charity that's created a business to give people and it sounds horrible, are very unlikely to get a job, with many companies. So they have given people an opportunity to work for their companies, to really push forward, and given them life experiences they probably would miss out everywhere else. It really touches my heart. So I've supported them now for a couple of years when I've met them. And then they asked me would I run the Great North Run, which is probably the most popular half marathon in the world, I would say, not just the UK. It's in my hometown of Newcastle upon Tyne. So stupidly, I said, yes, I'll do that. I don't run. And yes, I did the 13.3 miles, I believe it is.
Yes.
Just over 3 hours. I did one training run. My stupid brain was going, it'll be fine, don't worry about it. It was tough. I was in tears. My feet hurt. I could hardly walk for a week afterwards. But I raised a few £1,000s for the charity, which will go a long way. So I'm glad I've done it. I'm not doing it again. A couple of my staff are doing it this year now for the charity, and I will be there to support them on that. But other sports-wise, I'm a huge football fan from that, but that's watching football now rather than play it. I do a lot of mountain walking and hiking. So if I had to really break down the sport on it, it would be, if it's not sport, it is getting out and about, would be mountain walking, which it's great. The phone's in my pocket, it's switched off. I only take it out to take photos, and I'm literally on my own, and I can just enjoy it.
Okay, great. So let's move to another topic that you're good at. This is politics.
Okay, yeah.
So we touch a bit about Brexit and all the opportunities that Brexit brought to UK market.
Yeah.
What is your stand on, let's say, political view of the economic situation?
I think the Conservatives are doing useless. I think we don't have any good MPs in the country. I think they're all pretty much useless. They've either been born with a silver spoon in their mouth, and they don't know how real people live or have any concept of how you deal with day-to-day issues, altogether. Or on the flip side, you have, more down-to-earth MPs, but their ideas will never work, from that. And I think politics in the UK is broken. It's one of the least trusted professions, full stop here. I sort of like the American model slightly, where you are, what I mean by that is if you are the president, you can choose who you want as your top team. So if you want someone to talk about the medical world, you can get the best doctor to be in your top team, where you can't do that in the UK. You might have an advisor, but you can't have it. It's got to be an MP that's been elected by the people. We all like to have a bit of knowledge about everything, but you don't know how to run the NHS, for example. And if we look at it at the moment, that's a big topic in the UK. On this, but we have a health minister that really is not that involved in it, altogether. They just move jobs. So for me, I love politics. I think you have to be vocal, but you've got to be healthy. As I said, I think a lot of them are not great. Some of them do come up with some good ideas and that push, but I just want our politicians to just be more aggressive in a way. And I'm trying to be careful of my words here, of what I can actually say on your podcast, because I can be a bit too blunt sometimes. But they've just got to get a bit of oomph, and go, you might not like change, but this has got to happen. If you want.
What do you think about the idea that the king would have more influence that he has now? Would that be a good idea for UK?
I think the monarch should always stay out of politics. To be honest, I think it's good.
But the king has some really good ideas about ecology, and so should that just be his hobby, or should he?
I think he should be allowed to voice his own opinions without a shadow of a doubt. But I don't think it should influence policy, and I think that's a key thing, because if you're the king, let's be honest, you've got everyone working for you. You're not going to a coffee shop to buy a coffee, for example. You're not worried about how to make your next mortgage payment or meet your rent payments, or can you pay your children need new trainers? Can you afford it? These things. They're never going to know about that. That's not the world that they live in. So they can be very passionate. They can have charities. I believe they can be passionate, as you say. Obviously, I know King Charles obviously is very passionate about, the planet should be very green, etc. But you can't influence policy because of what he wants, from that. I think they should have their own opinion. They can address it in speeches, but policy has to stay separately. Policy is about what's right for the country going forward and how it affects, people like myself and everyone else, who are paying taxes into the system, how that will mean. Will it be better? And it should always be, whatever comes in place should always be better. Unfortunately, it's not always the case at the moment, especially at the moment.
So to sum up, you're not a royalist.
I love the royal family. I think the royal family is great, especially when we get.
I understand, but
especially when we get a bank holiday.
You believe in separation of monarchy and the politics.
I wouldn't, as I say, I'm a royalist. I think the UK has to have a royal family. I think they bring in a lot of revenue, into the UK. I don't mind that our taxes go to pay for the royal family, at all. From that, I just think that the work they do is very different. They should, to me, they should do a lot of charity work, which they do, because they can have a lot of influence that way. And I think they should have a big role in about making the UK be very attractive, to the outside world. But when it comes to homegrown politics, that's got to be dealt with at another level.
Yeah, I'm a bit biased because I got a lot of help from them in the past, so I'm not the one. That's why I'm pushing a bit. Or I'm
looking forward to the coronation because we get an extra day off.
Yeah, that is also good. So to sum up our interview, the best thing to invest in if you want a positive cash flow, and if you want to invest, let's say 100,000 to start with, probably you cannot start with less than 100,000, if I understand correctly.
Correct.
Would be something like student accommodation, something special. That
purpose-built student accommodation.
So purpose-built student accommodation.
There's a big difference, not just any old student accommodation.
Okay, so purpose-built student accommodation in the place where the university is strong and has some future plans, so that there's going to be a growth in the future.
Correct.
And that should be structured with a legal advisor and all this stuff, so that our American listeners don't lose money when investing in the first student accommodation in...
You should never buy a property, regardless what it is in the UK, without using a lawyer in the UK.
Mm-hmm. So is there any tip that you would like to share with us? And could our listeners just contact you if they would like to invest 100,000 or $1 million in UK? Would that be a good advice, just to somehow sum things up?
Yeah, look, they can, for me, they can approach the company. We'll speak to them and have that, talk and that advice with them. I think the tip is you've got to be honest with what you want for your money. There's no point going, I want capital appreciation, but I want a really high yield. The two normally don't go together.
Yeah, I agree. So,
so you've got to be
realistic.
Yeah, and for any investor, I will say, what is your goal? What do you want? What do you need out of the money? What's your goal over the medium and long term? From that, and that will allow you to have a much more blunt conversation about how things work, regardless if it's student accommodation, buy to let, a buy to flip, things like this, for example. Working with a developer, it just allows it to be very clear, very upfront, and transparency is key in this marketplace. You hear about a lot of people being burned, as in they've lost money, it's not gone right for them, etc. And there's always three sides to the story. There's the estate agent, developer, property person, and the truth, on that point.
I agree 100% with you. But that is property all over the world. It's the same.
Yeah, and I'm just very blunt, be very transparent, be upfront. When we speak to investors and we'll go, look, they've got money they want to invest, we will be asking them, what are you looking for, first of all? We want to know the clients. We want to know all about them. From that, it's our decision to like their decision is to who they want to use. It's our decision to decide, do we accept it or not? And that's the difference. I turn away a lot of investors, who want to invest with the company. They see developments that we are coming out and they want to get involved at an early stage. And once speak to them, I just think you're just not the right fit for us. I don't need the hassle. You're not in the right stage of your investment career of when you should be getting involved, in my own opinion, from this. And I would rather be blunt and upfront like this, because when you're investing with people's money, and people are buying property through you, you've got to be unbiased. You've got to look at it at an unbiased view to go, am I a good fit for you? And are you a good fit for me? And if you both are, then great, move on, and get the business done together and enjoy it. But if not, you're better off just walking away.
Mm-hmm. Okay. Thank you very much. I will include your contact details in the description, so our listeners can contact you if they think that you would potentially be the right fit for them. Thank you, James, again for all this wonderful insight and for being my guest tonight.
Thank you. We enjoyed it. Thank you.
Thank you, Mr. Faleskini, for this outstanding podcast. And thank you for listening to the Ask Faleskini podcast until the end. Mr. Faleskini would love to hear your feedback in the comments. And don't forget, if you want to know, ask Faleskini or listen to the Ask Faleskini podcast. In order to please the almighty algorithm, please don't forget to like, share, and subscribe.